you can't hide from the fact of the way that you are. And if you're constantly negative, people, it's delusion, isn't it? Because self-sabotage, you don't realize you're doing it. And most people will do that, not realizing that they themselves are their own self-sabotage. Not the strategy, not anything else, it's them. And they're doing it on a daily basis, because although you can give someone tips on mindset and you can give them strategies and you can give them ways to trade the market, at the end of the day, when you're alone and you're trading in your bedroom, whatever it is, you're the one having those thoughts. How's it going, everyone, and welcome back to another episode on the Falcon YouTube channel. As always, really hope you've been enjoying the content. I mean, the comments and the engagement has just been insane, so really do appreciate that. This episode, I cannot wait, and we've got so much in the works coming. We cannot wait to share all of it with you. So as always, like, comment, subscribe, make sure that you're alerted straight away, because the things that we've got in the works, we're going to be announcing some really important things soon, so make sure that you're updated first. So with this episode, so what are we going to be talking about? Well, the probable and the possible. Now, with this concept, it is so important because as a trader, you have to be thinking in probabilities and possibilities. It's the best way for you to have that more neutral state of mind. So what we're going to be covering is this concept. Now, of course, the probable and the possible, this is a concept that I came up with to really help with the emotional state of mind. As we know, psychology within the markets is the absolute key. You can be a great technical trader, but if you don't have your psychology on point, you're naturally going to struggle. So whether you're a trader that's trading the Falcon style or whether you're a trader that's trading a completely different style, this concept is going to help you out. So please do take some notes, and I would love to know your thoughts. Essentially, what it's going to help is reduce the hesitation and the ego within the market. It's going to encourage you to think in probabilities and possibilities, but more so, it's going to help you reduce your emotional attachment within the markets. You're going to absolutely love it. Let's get into it. Right, guys, so this is going to be a relatively short video, but just to teach you the concept from a chart perspective. So this is essentially going to help you remove that hesitation, reduce the ego, which is very, very important in the market, and just have an overall view so you're not emotionally attached to the chart. So what we're going to cover is the DXY. So we're looking at the DXY, we're looking at this structure. So essentially, this is more tailored to the Falcon community. You know what I'm talking about, but we're not going to be going over strategy today, just the concept. So let's take this structure, for example. We've got the DXY here on the daily chart, and we have this overall ascending channel. Now, if your bias or your idea is, let's even go to the weekly chart, is to expect this to move to the upside, for example, right? You might, have your reasons, however you analyze it, this is going to move to the upside. You might look at that and be so emotionally involved in that you think that this has to happen, which is where the ego gets involved. Your mind says, well, because of this, this, and this has to happen. This is what I think, and this is what I need the market to do. This is where the ego gets involved, and that is where it sabotages you. So what we do is that we look at it from a different point of view. We look at it from the probable and the possible. So what does that mean? Well, essentially is this. We're looking at pattern structure, so we can test over years and years and years of data that this particular pattern or this structure plays out X amount of time, percentage of time. So then we can take a look at a structure like this and say, well, if we took 10 of these structures, how many times would this play out, right? How many times would this structure play out? Now, if we can see that this type of structure plays out 9 times out of 10, then we know there's a 90% probability of this playing out to the downside. Now, we can't be so involved in that to then realize, well, what if this moves to the upside? Does that mean it's a failed pattern? What does that mean? Essentially, that's just a possible. You need to realize anything is possible within the market, but as a trader, you want to make sure that you've got an edge. So I would rather, in my opinion, be trading in a way, and this is how I evolved this style, is trading in a way that has a higher probability of playing out. So rather than me letting my ego involve saying, well, I think it's going to do this or this because of a support or something like that, I'm looking at the structure and saying, well, if I was to take this structure, for example, and look at this within the markets 10 times, how many times would this move to the upside? And if it did move to the upside, what type of variation would it show us to do that? So as you can see from this structure, it's a very high probability, a 90% probability that we're going to move to the downside from either here or to this outer structure. Why is that key as a trader? Well, that gives you an edge, and then you're not so emotionally involved in thinking the market has to do this, this, and this. So essentially the goal and the concept with the probable and the possible is for you to be in a more neutral state of mind. The more neutral you are, the better decisions you'll make, and the better decisions you'll make, the better trader you'll become. So essentially, the probable and the possible is a psychological, practical way of looking at the markets. So it reduces all of those things, and then naturally you become a happier trader, and it's more enjoyable. You know, it's not enjoyable to think that, well, this has to do this and this has to do that, because when it doesn't happen, it's then the fear of being wrong, and then your ego gets involved, and that's where you often, you know, become defensive. We often see that within the market. So that's how we look at it, and that really is the key concept to understanding the possible and the probable. So when we look at something like this next and say, well, what would that variation be? Well, in Falcon, we know what we're looking for. There's a type of pattern that will happen in this area that would give us an indication that maybe we're actually breaking out to the upside. And even if without warning, because remember, the market can, anything is possible in that sense, even if without warning the market exploded to the upside, what would we do? Well, we already understand the probable and the possible. The probable is that it will go down. The possible is that it will break out. And if it does break out, we then wait for confirmation, and then we look for more of a bullish bias, if you like, right? So it's really understanding that concept. And when you can think like that, you're never caught off guard. Now, you need to realize just because we have a 90% probability of this playing out to the downside based off of the structures that we've seen play out, doesn't mean that that 10% chance of this breaking out to the upside, that you have a 10% acceptance. This is the next key thing. Most people, what they'll do is they will see something like this and say, well, this pattern plays out X amount of time. This pattern plays out X amount of time. And then when the possible happens, which is a breakout to the upside, for example, your then mind goes, oh, I didn't think that was going to happen. That's because you wasn't thinking in probabilities. If you think in probabilities, you accept it already. You have to have 100% acceptance that there is a 10% chance that that will break out. And when you can do that, I promise you, you will become a much more neutral trader. And from what I've seen from successful people in the community and just successful traders as a whole that I know, they have a much more neutral state of mind. Very rarely you'll see a very successful trader get, you know, so emotionally involved that they think the market has to do what it wants them to do. The market does not care. It has no sympathy, no empathy. It will not give you any closure. The market will do what it wants to do. Now, of course, I'm very fully aware there is more than one way of trading the market. There's more efficient ways of trading the market. So it's really about, how can the probable and the possible concept serve you? How can it serve you? Well, it can serve you in the sense that it helps you think in probabilities. And why wouldn't you want that as a trader? So the next time you're looking at a particular structure or however you trade, whether that is support, resistance, or any type of different pattern that you're focusing on, or a supply and demand level, whatever it is, right? Try thinking about that. Just because there is a major support, let's say this is a major support that you liked and you saw price coming down to here, try thinking in a way that just because this is a major support and you're looking to buy, if that's your strategy, then it doesn't have to reject and play out. Because where people make emotional decisions is where, when the possible, and this is a key thing, where the possible happens that they don't expect, for example, they don't expect it, and then they make rash decisions. They make impulsive decisions, which are normally very, very bad ones. And then that ends up in a streak of losses. So they go from thinking, yeah, but I thought it was going to do this and this. Exactly. You thought it had to do this. This is where your ego is involved. So what this is going to do, this concept, the probable and the possible, it will really teach you how to stay more neutral in the market. So the next time you look at a trade and you have your strategy, whatever criteria it is, try thinking like that. Try thinking, well, this is the most probable outcome because this is my setup. Let's say there's a move down. It's pulling back to an area that you like, whether that be a trend line, for example. Try thinking in a way that, well, if it pulls back to here, this is where I'd like to take it. This is my entry point to take that for a sell, for example, when the market pulls back. What if there was another criteria where it didn't have to pull back? Is there a way that you can adapt and evolve your strategy in that way? Because you have to understand, when the market picks up momentum, and this is where this probable and possible really came about as I started evolving my trading over the years, was that I used to see so many trades completely drop without any pullback. So I'll give you an example. If we take a look at USD CAD, if we get USD CAD up on the screen and we take a look at something like this, this was a trade that we took within Falcon Falcon community, you know what I'm talking about. If we take a look at that leg, we take a look at this leg here, very simply, how many pullbacks were there? Any really deep pullbacks? Now you can imagine around these areas, so many people would be waiting for deep pullbacks. This was the deepest pullback we had, but it just continued. So as you can see, in an impulsive leg to the lows, as a minimum to the lows, this is where the market doesn't pull back. So having that, well, this is what's probable, this is what's possible, will give you a much higher percentage chance to be able to take advantage of these moves. And essentially, as a trader, that's what we're here for. We're here to make money. We're here to capitalize on these trades. Not have an ego that doesn't serve anyone. So guys and girls, just a really quick lesson. I hope it helps. It's a really important tool that's helped me, and a psychological way and a practical way of looking at the markets. So if this can help you reduce hesitation, if this can help you be less emotionally attached to the market so you can become a better trader, then perfect. Please drop a comment. Let me know your thoughts. I would absolutely love to know. And what I'm going to do on the whiteboard in just a second is just break down a few concepts as well, and a particular challenge and a tip that you can take away so you can start working on things that actually helps remove your ego as well. So I'll see you all in a second. Right guys, so I hope that's given you something to think about with the probable and the possible, and definitely something you can focus on now moving forward regardless of how you're trading. So essentially reducing that hesitation and that ego. There's nothing worse than being hesitant in the market. And being hesitant normally comes from things like a lack of clarity, being a perfectionist in the market. And when you've got an ego in the market, then, you know, that's a whole different ball game. Naturally, you've always got that, you know, fear of being wrong, and it's not an enjoyable way to be. So these are tools and strategies and a practical way to reduce that. So then we move on to encourages thinking in probabilities. Well, why is that? Well, essentially, when the possible happens, you accept it. When the probable happens, you accept that as well. When we're thinking about it in the markets, we always want to assume that we're looking at a particular structure and we're measuring that. So let's say we're looking at something that we take 10 times. If we know on average, you know, that plays out 9 times or 8 times out of 10, and the one time that it doesn't, which is the possible, you're not then shocked and then making bad decisions after, because that's what people do. Something happens that they don't expect or understand because of their ego and all these things linked together, and then what happens? They then start making impulsive decisions, fear of missing out, they start jumping into trades, they start over risking, and that's how they blow their account. So it's a downward spiral. So this concept is truly going to help you be in that more neutral state of mind. And then we move on to the last one, which is reduces emotional attachment. This is so important, guys and girls. When you're in the market, it's so easy to look at every tick of the candle. I know what it's like because I used to do that. I used to literally watch every one of my positions, and I would be seeing the 5-minute candle, the 15-minute candle just fluctuating, and I'd be waiting. And as soon as it closed in my favor, I would then have this sense of relief, and I'd feel anxious the whole time. So I know what that's like, and that's not a good way to do that. But when you're thinking in more probabilities and possibilities, I've already accepted it. So for example, I just took Euro Kiwi. I just done the update in Slack for the Falcon guys and girls. I took that trade. It's open for the full 1%. I've accepted the probable and the possible. If I get taken out for a loss, it doesn't matter, because I'll take that same setup 10 times in a row. And guess what? 8 or 9 times out of 10, that will play out. So why would I question it on the one time that it doesn't? And the reason as to why is because you're being a perfectionist and you can't accept that a great trade that meets all of the criteria didn't play out. Probable and the possible. And just remember that a perfectionist mind will never complement an imperfect market. So what does that mean? Essentially, the market's imperfect. It's never going to be perfect. So you inflicting your beliefs of having that perfectionist mindset, that's never going to serve you, and it's going to lead to constant frustration. So I really hope that this helps you out. So the key tip, this is a key tip that I want you to take away with this, and feel free to tag us as well. We want to know that when I'm making these videos, that it's not just a video for you to just enjoy. It's a video that you can take practical steps from. I'm very practical. So it's something that you can tag us in Instagram. I'll leave the tag so you can tag us. Let us know how you got on, whether it's 2 or 3 days in or a week in. So essentially, what is it? The Emotional Language Journal. You will be surprised and astounded at how much negativity that you do on a daily basis when you're trading. So what you're going to do is, whether you record it through your Evernote, your Notion, or you write it in a journal or in a Word document, whatever it may be, essentially what you want to do is start tracking how you're thinking and feeling day to day in the markets. So the next time you go to the charts, do this for 7 days. So next time you go to the charts, let's say you're looking at something and a trade that you're looking at does something that you don't expect. think about, be aware, be self-aware to the language. Do you start saying things like, oh, well, why is that happening? Why is this happening this? What happened to the pound pairs? This is common language that you see. What happened to the USD? You constantly want to know why. It doesn't matter why it happened. That shows me you're not thinking in a probable and possible mindset. Probabilities doesn't care why it happened. All you should be thinking about is the setup there. Should I have taken the trade? Should I have not have taken the trade? Am I sticking to my plan? So what you'll find in this emotional language journal is that in a week's time, you can't hide from the fact of the way that you are. And if you're constantly negative, people, it's delusion, isn't it? Because self-sabotage, you don't realize you're doing it. And most people will do that, not realizing that they themselves are their own self-sabotage. Not the strategy, not anything else, it's them. And they're doing it on a daily basis, because although you can give someone tips on mindset and you can give them strategies and you can give them ways to trade the market, at the end of the day, when you're alone and you're trading in your bedroom, whatever it is, you're the one having those thoughts. So be aware of your inner dialogue. What's that saying? So this is the key thing. So this is going to help you out massively. And the best way to start fixing that, reducing your ego, is not just the probable and the possible. You have to bring these things to your awareness. So I would love to know what you find, whether it's 2 or 3 days in or a weekend. Tag us, let us know. I would love to see how you get on. I can assure you, if you really grasp this concept, however you're trading, naturally you'll be neutral and your trading results will improve. Let us know your thoughts. Guys and girls, our next episode is going to be awesome. Cannot wait to speak to you all soon.